Hello and welcome to Unleashed, the show that explores how to thrive as an independent professional. I'm your host, Will Bachman, and I'm here today with Tushar Shah, who is the founder and managing partner at Kinderhook Partners, which kind of funds and manages several search funds. Tushar, welcome to the show.
Hey, how are you?
Doing great. So, Tushar, let's start by tell me, what is a search fund?
Great. So search funds are a form of entrepreneurship founded by and sort of first formulated by a professor named Irv Grousbeck back in 1984 at the Harvard Business School. And the idea is basically for a small number of investors to fund an individual who's at business school, typically just out of business. Initially, it was just sort of right out of business school. So initially at Harvard Business School, someone used to sort of say doesn't have a rich uncle to fall back on, and so he finds 10 investors that would give a small amount of money to pay for a basic salary for this searcher for a couple of years, as well as some diligence expenses and travel expenses and deal expenses, and to give that person then time, a couple of years, to go and try to find a small business to acquire. And in some ways, they're basically small leverage buyout transactions. So typically, service businesses, anywhere from 10 to 50 employees, typically 1 to 3 million, 4 million, 5 million of EBITDA. And the idea is often these businesses are owned and run by the same person, and often they don't have a child that's going to take over the business or someone to give it over to, and would have a hard time finding someone to sell the business to. And so here's this young, very energetic and ambitious business school grad that wants to find a great business to buy and to run and manage. And so when these searchers find a business like this and an opportunity to buy a company, those 10 initial investors that sort of gave the money for the search fund, they have the first right to invest in that deal. And the searcher then becomes the CEO of the new company or of the company, and gets the right to own equity, typically somewhere between 20 and 30% of the upside when the money is returned back to the investors that they put up to buy the company. And so it's been it started out with just a handful of searchers per year in the 80s up until probably the mid to late 90s, and then it started growing more. And now there's sort of well over 50 searchers a year that are out there doing this activity, trying to find deals. And it's also expanded internationally. And so now there are searchers in many countries in South America, many parts of Europe, even in Japan, Australia. And it's a really exciting field. And investors have really benefited from it. Returns have been over 30% compounded. And this is going all the way back, for many, many years, and it's held pretty at a very high level, which has been great, much better than sort of you would get if you put your money in the stock market or some other asset class. And it's obviously a wonderful thing for the entrepreneurs that are able to come out of business school with relatively little experience often and be able to actually run and build a company. So let me stop there and see where you'd like to take the conversation, Will.
So how do the exits for the investors typically work? Let's say that the searcher has found a business that he or she wants to stay with for the longer term. Do the investors, is there typically some, thing that happens where they'll sell it to a private equity firm, or so what would typically happen after several years of the searcher buying the business and being successful growing it?
Yeah, so typically the expectation going in is that this is a sort of 5-year plus kind of time horizon sort of opportunity. And so the searcher will come in, they'll take over the company, get to know it, hopefully grow the business, improve the business, make it much bigger and more profitable. And often there are two ways of money going back to investors. There can be recaps, so debt recaps, where a company will go and raise a bunch of debt and give that capital back to the investors, and that would be a form of getting capital back to the investors. Or, as you mentioned, certainly there could be a sale of the business as well. And there have been many, many examples now of companies, getting sold to other private equity companies or firms or strategic acquirers, and in a handful of cases, even a couple of cases, even some of these companies going public as well.
I'm actually kind of surprised that the number of these is as low as 50 per year. It seems like a small number of people searching for a business to buy in the whole United States. Or is that number not including people that are sort of not under this official plan, but people who are just out there looking to buy a business, maybe on their own? That doesn't quite count. This is people that are funded by a group of investors specifically for this purpose, I guess.
Yeah, I mean, for sure. No, you're absolutely right. If you included all the people out there looking for businesses, the number would be much, much higher. And in fact, there is a sort of class of other folks called self-funded searchers, which typically who are typically using money that they've saved or whatever to help, or maybe they have a job on the side while they're out there looking for a deal. And those deals, however, sometimes those deals are much smaller, and they certainly often don't have sort of this group of search fund investors that have been doing this kind of investing for many, many years, sort of backing them. And there's pluses and minuses of that. But yeah, no, I'm talking about just this very narrow set of folks that are out there searching in this very particular way.
And so let's say the searcher finds a business that they want to buy, but if the investors don't like the business, I guess sometimes not all 10 of them or so would decide to invest, and how does it, and if they don't like the business, they don't invest, and then tough luck, they help fund the person's search, but then they just walk away from that one.
Yeah, well, so another nuance to this is so the initial capital going in, so typically let's say it's 10 investors putting in $40,000 each, which is sort of a rough benchmark for a single searcher. So that's $400,000. So what happens at the time of the deal to basically to pay those initial investors that put up the money to do it an adequate return, that $400,000 is stepped up by 50% at the time of the transaction. So and either if you decide you don't want to invest, typically you'll get your money back. So if you put $40,000 in, let's say, you get $60,000 back. So you make a bit of a return there when there's an actual deal that happens. But if you are investing in the deal, then typically that money, that $60,000 of value, gets rolled into the transaction. And so that's how it works. And so often, almost always, there's going to be a handful of investors that don't invest in the deal, and usually that gap is made up by the rest of the investors that do want to invest. They'll put more than their share in, or there can be gap investors. There's a pretty wide network now of investors that have done these kinds of deals over time, and the searcher will call around and find other investors to fill up the gap.
Now, so it sounds like these businesses are a little bit too small for even the smaller private equity firms. Is that right? Is that why they're kind of in this bit of no man's land where they're maybe too small for a traditional lower mid-market PE firm?
Yeah, it's sort of, I mean, the history, and there are definitely examples of much smaller and much bigger businesses that are also acquired through this model. But right up the middle, you're exactly right. Typically, lower middle market private equity is kind of bigger. Typically, they're finding they're going after businesses that are a bit bigger, Again, there's another nuance, which is that for a private equity firm to buy a business, they typically, they need someone to run the business. They don't typically put one of them doesn't become the CEO. One of the private equity professionals don't become the CEO of the company typically, and so they need to go fight. They need to typically, if the owner is the CEO of the company, they'll need to go recruit a new CEO for the company, right? Because often, or the CEO will have to stay on for 3 to 5 years, and build the company up and help the private equity firm then sell the company themselves and make money for themselves. And so there can be this, often that's why the model works, is the search funders can often find really deals that you can't find otherwise because they're filling this unique gap where both the deals are kind of small as you're describing, but also they can fit they can become the CEO themselves. And typically for a private equity firm, for a small business like this that they're trying to buy, it's very hard for them to, they're not going to go find a Harvard Business School grad typically that's going to be all excited to go. It'll be really hard for them to find someone like that to come and run a business of this size.
Is this, you mentioned that it's graduates of business schools. Is it typically kind of fresh graduates that do this, or are there people that maybe go do consulting or banking or some other thing for 2 or 3 or 5 years and then decide to do a search fund? Or is it primarily just recent grads?
It's, initially it was almost entirely Stanford and Harvard Business School grads that were doing it, and almost entirely fresh, sort of right out of business school. I'd say for sure over the last 10 years, the pool has broadened, and they are now, as you're describing, folks that are, some may have not even gone to business school, but they've had operational experience. They're maybe a little bit later in their career, and they've done search funds. In fact, one of our most successful investments in the search fund world was someone that, he was later in his career. I mean, I think he was in his early 40s when he started his search fund, which is, on the older end for search funders.
You gave a quick snapshot at the beginning that it's often services businesses, but give us tell us a little bit more about the types of businesses that people end up finding and acquiring, and maybe give us some specific examples. It could be sanitized or unsanitized.
Yeah, absolutely. So, in the very early days, there were all kinds of businesses getting acquired. And over time, the people that were in this world figured out that the highest hit rate, where you found a business, often, it takes the searcher. Often they don't have a lot of operational experience. They're obviously very smart, very bright, very capable folks, but they need some time to get their sea legs running a company. And what the search fund investors and this sort of community found out was that recurring revenue service businesses tended to be the best fit for this model. And, so if you have a recurring revenue business, one where you don't have to go get the customers every month, every quarter, that's a much more stable business. It's a much easier business typically to transition into and transition management from one person to the next. And so that's been, the biggest bulk of deals have been sort of those kinds of businesses, recurring revenue, typically business to business services type companies. But that's not the only kind of company, for sure, that have been bought in this model. And just to give you, the most successful of all the search funds to date has been a company called Accelerators. It's one that isn't, they're not public. People wouldn't know them typically, but many people will know the service. They are the folks that provide cell phone insurance. So if you buy a phone, get an iPhone at AT&T or Verizon or wherever you get your cell phone service, typically the provider of the insurance for that phone that many, many people buy is a third-party provider called Tushar. And it's a really interesting story. So I can give a quick snapshot about. One search funder, and then kind of he paired up with another, I think business school friend of his. They acquired a roadside assistance company in the late 90s. So this was a company literally that they, as a third party service, I can't remember who they were selling the service through, but if your car got stuck on the side of the road, you called their number, and they had a network of tow trucks and stuff that would come by and help you out. And as part of that business, they started providing a similar service for, if you remember, a long time ago, in the early days of cell phones, there were these brick phones that you would literally this big, box-like devices that you could put in your car, and you have a car phone right in the car, and these guys started servicing those devices, and that morphed in over time. this was after they acquired the company, to being, as cell phones kind of, went from 1% penetration to basically everyone having a cell phone. They rode that wave, and they were able to secure the contracts for all the major carriers to be the back-end provider for insurance services on these phones. And so that company went from a very, very small company that when it was acquired to being just a massive company today, with huge revenues and profits. And that's a company that never it had many recaps and investments by private equity firms and so on, but it was never sold. The same management team is still there running the company many years later.
What are some other examples? Give me examples of service, recurring revenues, services, businesses, B2B services. What are other examples of that?
Yeah, so I'll just give you a couple interesting examples. So that are just in our portfolio of companies. So there's one company called CanSource, which is a company based in Denver. They provide cans. So if you're a craft brewery and you want to sell some cans of your beer, you can't go. Ball is the big manufacturer of cans. So if you get a Coke can or a beer can, it's likely made by Ball. There's a couple very large companies, Ball being by far the biggest one, and you need to be ordering those in the truckload quantity, huge numbers of those cans, because the way that they're made is they get made and they get printed at the same time. If you want a small run of 1,000 cans or 5,000 cans, you can't go to Ball and get them. So what this company does is they get blank cans essentially from Ball. They put a sleeve on top of the can, and then they send those cans over to the winemaker. That now there's a lot of wine, that's being sold in cans. Beer manufacturers, kombucha, all kinds of beverage folks. And there's been a real explosion of companies. If you go into any C-store or supermarket or wherever you might get these kinds of beverages, you will have noticed, right? There's just an explosion of different small companies selling these products. And that's what CanSource provides, is an outsourced service. We were fortunate to acquire the company a couple of years ago, and actually was one of the, some companies obviously some companies really had a hard time through COVID. There were some beneficiaries, and this company was a major beneficiary, as more and more people were obviously at home consuming a lot more beverage at home, not at the bar or at the brewery, and so they had a real surge in demand through that period, and still continues to today. There's another company, to give you a sense of geographic breadth as well, called NeoAssist. It's a software company based in Brazil. So this is a company that provides customer service software. If you've, again, most listeners will have been to consumer websites, or, if you're buying any kind of e-commerce website, et cetera, typically there'll be a little chat window there that you can interact with the customer service people. And that's the software that this company provides. So it's for a lot of e-commerce companies, even some B2B service type businesses. They provide the software functionality that allows the communication between the customer and the provider. Those are just a couple of examples. Happy to give you lots more that I could give you.
How do searchers typically go about finding these smaller businesses to acquire?
Yeah, it's a great question. So it's in the early days, it was a lot of brute force dialing for dollars, literally picking up the phone, getting lists of companies and calling them up and trying to get some CEOs on the phone. As with the internet and sort of so much information being available online, and so many lists and things available online, often the searchers have a whole range of communication methods by which they kind of reach out to small businesses. They often will have a team of interns that they recruit to help them in this process. And so often there'll be a campaign of literally physical letters, email, phone calls, internet advertising of various sorts, to try to drive business owners to see their pitch and to ultimately drive to a phone call of some type between the searcher and the CEO of a small business. And it's like any kind of sales process in a way. I mean, so literally these searchers are contacting thousands and thousands of businesses, and of those they will have 10% of them that get on the phone, and of those 10% of them might be interested in some kind of deal process, and then eventually hopefully one of those turn into a deal.
And what have you seen as successful strategies for people? Is there typically like a successful searcher will have maybe come up with a hypothesis around a specific sector that's attractive and look for businesses there, or do they just kind of spray the world looking for any kind of business in a particular geography, or how do they go about filtering the whole universe of the thousands and thousands of businesses out there?
Yeah, no, absolutely. I mean, it's the universe is probably, just in the United States, I mean, there's probably 1 million targets, right? Like literally, it's 20 million small businesses, depending on how you count them, and the ones that could be of the scale and so on. I mean, so obviously, you got to have some method to decide where you're going to focus your efforts. So there's two broad camps. There are some folks that go down an industry-focused search, and they decide, I want to buy a vertical B2B software company. I want to buy. We had a searcher who was extremely focused. He wanted to buy a franchisor of home care services company. And in fact, this is the first search fund deal that I went on a board of. And there were maybe 15, 20 targets out there, and he called all of them, and he got really smart about them, and he got a deal done. He found one of them to buy, and it was a very successful deal. It did about 10 years ago. A company called Griswold Special Care. And so, so there are a whole bunch of searchers that do very focused searches. And that can be really powerful because it obviously helps you narrow your range of what you're looking for. It also makes you typically, the 10th time you're having a conversation with a CEO of a similar industry, you're going to be much smarter about that industry. You're going to be much more persuasive in convincing the CEO owner, right, of their business that you might be able to actually buy it and run it and take it over. Because typically for the sellers, it's not just that they care about the best price. They also want to leave their, this life's work that they've had, because usually they're older and so on. They've worked at this business for many, many years. They want to leave it in the hands of someone that's going to really enable the company to flourish. And so that can be a really helpful model. I'd say that having said that, often searchers will find deals in sectors they don't even think that they're going to go look at in the beginning. It's a very competitive market out there right now. There's a lot of capital chasing opportunities. And so searchers, I think, have to be pretty opportunistic. And so often they will have targeted they'll go from one industry to the next So they'll go say, okay, I want to find water filtration services businesses in the Northeast, and then they'll go try to call everyone that they can. They'll get interns to go, dig up a bunch of opportunities, and they'll go pursue that, and then they'll run its course over a month or two, and then they'll go on to the next one. And so that's often the process that ends up ultimately leading to an opportunity. But, there are a bunch of examples where you let's say, you wanted to find a B2B vertical software company, and you talk to a business broker in Florida, in Jacksonville. They happen to have a deal that you were looking at. For whatever reason, the searcher doesn't do that deal, but that guy happens to have this other business that he knows about, right? And that business has nothing to do with B2B software, but he lets the searcher know about it because they had a good relationship or they had a good couple conversations, and that turns into that ends up being the deal that you end up buying. So some of it can be a little bit random, I guess.
Now, tell me a little bit more about what your firm does.
Yeah, so I guess I didn't mention that in the beginning. So we've been around since 2003. We invest mostly in small public companies, but back in 2005, so now it's been almost, I guess it's 2004. So it's been almost 20 years that we've been investing in search funds. We started doing search funds, and in the last 6-7 years, we've been doing a lot more in the search fund world. So we've backed at this point over 100 of these search funds. Right now, as we speak, we have over 40 active search funds throughout there, and I think we have search funds in 8 different countries around the world right now, looking for opportunities. We have a portfolio of about 35 active search fund companies that are out there, that we've participated in the actual acquisition. And so, as part of the process of the investors working with the entrepreneur, typically at the time of the transaction, a benefit of this model is that the search fund investors, some subset of them will typically become board members of the business. And so the entrepreneur is not in there alone, is getting the guidance and the help of this, group of experienced investors, and many of them being former operators as well, to help along the way. And we do a bunch of that as well. So we're, between my partner and myself, we're on, I think, eight search fund boards as well. And so that's how we're involved. And it's a really, for us, it's a very lucrative way to invest our capital, and it's also just a ton of fun, because we get to look at, we get to work with these super talented entrepreneurs and learn about all these really interesting businesses all over the world.
No. So does your fund typically take the whole kind of enchilada for someone? So you would provide the whole, let's say, 400,000, or are you one of the 10 investors that the entrepreneur has to assemble, like the other 9?
Yeah, no, I'd say, so the search fund world, I mean, there are some investors out there that are doing the whole enchilada, as you described, and that's almost a different animal. So this sort of the search fund universe, quote unquote, is really this kind of distributed cap table where you have a whole bunch of investors. And so we are one of, we'll typically do about 10% of the search fund, so in that case, 40,000 out of the 400,000. And at the time of the deal, we are one of the bigger, sort of the investments that we make per deal tend to be on the higher end of sort of the universe that we're in. And so we will often be sort of 10 to 25% of the deal when we actually get to the investment stage. So but we don't take the whole thing, though.
Yeah. So how do these graduates of business school, how will they typically go about assembling this pool of 10 or so investors? Is there some organized process for this, or are they just working their network, or is there, like a set of, 50 of these people that they're interviewing? Like, how does it work for someone to assemble that set of 10 investors?
Yeah, it's the universe is relatively narrow, so I mean it's getting bigger every day, I guess. But there's sort of, in the U.S., there's probably 50, core investors that are sort of have had a lot of experience investing in many search funds, and then there's going to be lots of folks that have done maybe 1 or 2 search funds and that are sort of just getting their feet wet, and deciding whether it's something they want to do more of. And so it's a pretty tight, network, and it's by its nature of how the search fund world works, because all the investors are typically on we're all sharing boards, right? So, on this deal, I might be on the board, but on some other deal, I won't be on the board, but there'll be some other co-investor, right, that's on the board. And so it sort of necessitates cooperation between all these market participants. And so often, if a search funder, a potential prospective search funder calls me up, and we have a good conversation, then obviously I will, then I'll put them in touch with a whole bunch of other search fund investors that we typically invest with, and vice versa. And so it's kind of a networking approach, but certainly if you get into this world, I mean, there's a pretty pretty clear set of initial investors that you might want to go reach out to that have done a lot of search fund investing.
So,
and the established, the business schools where a lot of graduates, have done this. The professors and even within the alumni communities, et cetera, they're very tight networks there that can help.
Interesting. Well. Is there? It sounds like it's a more informal process. It's not as if there's a kind of search fund day at Harvard Business School recruiting where the funds would show up and people can audition or that kind of thing. It's more working the network.
Yeah, I mean they are. So Stanford every year has a conference, a search fund conference, which is really more focused on existing investors and existing companies and so on. But different business schools do. I'm pretty sure Chicago has in the past, and Harvard as well, where they do organize these events where there is some of that happening. It's not sort of as formal as you just described, but it's you'll have a bunch of investors come and people speak about the search fund model and so on, and then you'll have existing students that are thinking about it or know that they want to do it, and it'll be a good time for them to network and get to know investors. Obviously, with the pandemic, that kind of event has slowed down, but it's starting to come back again, and I'm hopeful I'll get to go to a couple of those in the next 12 months.
Are the contracts sort of standardized now for this space?
Yeah, they are. I mean, it's a pretty straightforward. There's a standard legal agreement. There are little tweaks here and there sometimes between fund to fund, but pretty much around the world. I mean, there's some unique, if you're in France, there's unique laws there around how equity can get set up in certain ways in Germany and in Brazil as well. And so there's some unique tweaks here and there, but pretty much the structure is the same. It's, these initial investors put up a certain amount of money. They get a step up if a deal happens. If a deal doesn't happen, they lose their money. And then the new investors, and then typically the searchers have a set model to get their carry. Again, that sort of 20 to 30% of the upside.
So let's say a listener of the show who's an independent professional, maybe he's like, oh, that sounds interesting. Maybe I'd like to do that. Is there a way for people who have been out of business school for several years to get into this space? How would someone who's graduated 2, 5, 10 years ago who wants to do a search fund, is there a path for that person?
Yeah, I'd say that absolutely. And I think the first step is to read a bunch of the material that's available online, and there's a ton of it. So Stanford does a primer every few years. And if you just literally type into Google Stanford Business School search fund primer, you'll find it. I think they have a little bit of you have to put in your information or something, and then they'll send you this PDF. I think if you read that document and you decide, wow, this could actually be pretty interesting to me, I think this could be an interesting path for me to pursue. Then I would just reach out to, again, you can just Google search fund investors, and there's actually a networking site called searchfunder.com. It's sort of like Facebook for search funds. So there's a number of online resources, and if you just start reaching out over LinkedIn, I'm sure you'll be able to get in touch with a whole bunch of search fund investors. Welcome to reach out to me as well, and then you can start getting a sense for, is this something where I might be able to get traction with search fund investors, and also from my side, do I think this could be a good path for me? And obviously, talking to other search fund former search funders that bought companies, ones that did the process but didn't find a deal, et cetera. Again, there's a lot of resources online, and you can identify now that the universe is pretty big, and there's a lot of folks out there that have done this or are doing it right now. It's a relatively, I think, easy community to learn about and to interact with.
So Tushar, having done a lot of these deals, what are you typically looking for in your selection criteria to decide what entrepreneurs you want to bet on?
Yeah, so we like to see evidence of success and achievement. So, that can be academic. It can be through what they've done at work, the kinds of jobs they've had, and the success they've had at those jobs. We want to see that they've had lots of conversations with search funders, but really importantly, with folks that have gone through the process and have succeeded and not succeeded at being a search funder, and the most important thing to us is that they really understand what it is to go, that difficult process to go find a deal. It's a 2-year process. It can be really lonely if you're a single searcher. We don't talk about it much, but sometimes there are also dual searchers that do it in pairs, which can be a little bit easier. But still, whenever you get a deal done, it means that you probably have literally spoken to 500, 1,000 businesses by the time you find the one that you're going to do. And so you have to take a lot of rejection, and you have to be extremely persistent and have to be able to persevere, right? So we have to feel confident the person knows what they're getting into, and also that they really have a strong desire to run a company. Ultimately, that's what's behind all this. And you're not going to be able to get through those 2 years of searching and find a company unless you really are committed to that end goal, right, of running a company, and that fits for you and for what you want is the next step of your career. That's kind of what we look for.
To what degree would you say that the ability to successfully find a business and close a deal, how is that related to the ability, once you've closed the deal, to actually lead and grow the business? Are they strongly correlated, or are they in some ways almost orthogonal? Like someone could be great at closing the deal, but it doesn't tell you much about if they're going to be good at running the business or not.
Yeah, no, it's a great question. It's really unique about this this sort of method of finding opportunities, entrepreneurship. And you're exactly right. The skills it takes to go get a deal done and raise the money, find the company, negotiate a deal, get the trust of the seller, and then raise capital from your investors to get the deal done. That's a different skill set often from actually running and managing a business. And there are many examples of folks that are only good at one and not the other, for sure. One of the things on the first step about actually being able to get a deal done, that's part of why the model kind of works, is you have to go convince 10, 15 investors to invest in your search fund to begin with, right? And just that process, you have to talk to literally, tens, 50, 100 folks before you're going to get to the point of actually even having a search fund to begin with. And often, if you're able to do that and convince folks to give you money in the search fund phase, that gives there's some likelihood that you're going to be the kind of person that's also going to be able to get a deal done. So that can help. But you're exactly right that when it comes time to running a company, honestly, we're taking, as investors, we're kind of taking a bet, and an unknown kind of bet to some extent on whether that's going to work. And often, as I mentioned earlier, the search funders often, they may have worked at a consulting firm or an investment bank, and they may not really have had much operating experience. A lot of them will have done an internship. Some of them, if they knew they want to do a search fund after business school, for example, will do their internship at another search fund, so they get at least a taste for it, and they get some operational experience under their belt. But that's it's only a summer. And so, honestly, sometimes it doesn't work out. And often, even if it's a great company and does well, it'll make sense to evolve the leadership of the business post the acquisition. But amazingly, that's what I mentioned earlier about how our selection criteria, if the person has a real drive to run a company and manage a company, and they have a competence to do it, and just the raw, talent to do it, and that's what we're selecting for to some extent. It's amazing. We were kind of really skeptical, honestly, when we first started investing in search fund 20 years ago about this, but it's amazing to us how really talented, hungry, ambitious people. I mean, what they can do, and tied together with a good business. That's you got both, right? You have really talented folks, but also just fundamentally really attractive businesses that have really good tailwinds going for them. And the combination of those things, just amazing things happen.
Other than selling a business to a search funder who happens to find them, and it sounds like right now there's only 50 or so per year, for someone who is, started a business and grown it and their kids don't want to inherit it or run it, like, what are the other ways that, business owners use to sell their business? Maybe you could talk a bit about, business brokers, or if there's other things. If it's too small for a PE firm, what are business owners doing to sell the business?
Yeah. So, from a business owner perspective, for sure, there's a route of using a broker, a business broker, and certainly if you go with a business broker, the search funders are, one of their first steps is getting deeply connected in with a broker community that are sort of focused on selling businesses of these kind of the sort of search fund scale. And so often you're going to be interacting. You may find yourself talking to some search funders eventually. I think right now, broadly speaking, it's still a seller's market. If you got a quality business, there are a lot of folks out there that will be interested in your business. And so, from a search funder perspective, we ideally are trying to find businesses without a broker involved, because often we have a higher chance of closing that deal and also a chance of potentially getting it at a more attractive valuation if there's not lots of competition. Obviously, if you're on the other side of the table and if you're a seller of a business, you may want to have a broker involved, or you may want to have a process in place to have multiple bidders or multiple people being interested in your business. And so from your point of view, it's sort of, in most industries, with a handful of phone calls, you should be able to get in touch with either brokers or other strategic acquirers or folks that could be interested in your business or help you to sell your business. As I said earlier, it's definitely a seller's market today. Still, there's a lot of capital out there and a lot of folks that are interested in buying quality businesses. So it's a good time to sell if that's the right thing for you to be doing with your business.
To what degree they're obviously competing with one another, but to what degree are any search funders cooperating? It sounds like there's a lot of work that's somewhat duplicative of, getting lists of businesses and making phone calls and so forth and hearing a lot of no's. Is there any models other than just two people pairing up? Have there been cases where people create some central repository of, businesses that don't want to sell, or that, we've called and tried? Is there, or hey, it's not right for me, but maybe someone else would be interested in this business?
Yep. No, it's a great question, and there actually have been a handful of there are a handful of search fund accelerators, the people that have sort of tweaked the model in different ways, and one of the key ways is to leverage the work from one searcher to the next, because as you say, it's certainly true that a searcher is talking to these hundreds, thousands of companies, and they're only going to do one deal, and so there's a lot of work there that theoretically could be leveraged by the next searcher. And it is true that there are certainly times when a searcher we have a case right now where there's a searcher that has two deals that are very close to getting done, and they picked one, and they're handing off the other one to another investor, another search fund group, and they're going to keep a little bit of economics. They figured out some kind of way to make it fair, but that can happen from time to time. But I'd say that what ends up happening is a lot of the information and value of the communication and the work being done by the search fund, by the search funder to go find a deal gets stale pretty quickly. It's sort of like either the time is right or the time is not right. And a lot of stars have to align. And so there's maybe less value to that coordinated effort and repository of information than may seem like there would be. At least that's been our experience. It's sort of, there is a little bit of reinventing the wheel that does happen, but there's a lot of shared resource around. Like there's already very clear. The search funders have all kind of figured out now, and they're very great about sort of sharing information around what CRM to use, what business list to buy, where to get the information, et cetera. But then beyond that, it's really like, you got to start, making the phone calls and sending the emails and seeing where you get.
If folks wanted to learn more about your firm, where would you point them online?
Oh, you look, if you go to kinderhookpartners.com, you'll see a bit about us and a little bit of the background and sort of what we do and so on. And feel free to reach out to me. I'm on LinkedIn as well, and feel free to reach out, and happy to chat with either folks, either on the business side or folks that are maybe interested in being search funders themselves or exploring that as an opportunity. Always happy to chat.
Fantastic. Well, Tushar, thank you so much for joining today. This was a great conversation.
Oh, no problem at all. Thanks a lot, Will.